Uneducated Economist here. So in today's video, we're going to talk about what would happen if the debt ceiling is reached and the United States begins to default on their debt. Now, this is something that has never happened, the debt default. We've hit the debt ceiling many times, but we've never defaulted on our debt. Now, there has been defaulting by the idea that we essentially are printing up money to pay the old debt, which is technically defaulting since you're not really paying the debt back. You're just going deeper into debt to continue on with the debt payments. But essentially, we are continuing on with the debt issuance and raising the debt ceiling, and that is going to continue on going into the future, regardless of whatever you hear coming from all the economists out there talking about the failure of the United States, unable to make their debt payments and all that other stuff. That's all hype. The United States will always be able to pay their debts because they have the Federal Reserve to buy it. Right? So they have a printing press to make sure that it will make the payments regardless. There is zero chance of default. The problem that we face is that the payments that are made, the purchasing power from that cannot be guaranteed. And that's where the problem really lies. So what could happen if we do run into the debt ceiling and they do not raise the debt or the debt ceiling and issue out more debt? Now, I don't believe this to be the case. I think that they will raise the debt ceiling. They may even remove the debt ceiling altogether and just say, hey, we're just going to issue out debt until further notice. But they are not going to default. If they did default, that means people who are holding the bonds will not get paid. We're talking retirement funds, insurance companies, other sovereign nations, banks, like everybody holds bonds. It is the safe and liquid asset of the entire world. A lot of times people can look at the United States Treasury in the same sense of gold back when we were on the gold standard. The United States Treasury essentially replaced gold. So now everybody holds this United States Treasury debt. Even the BRICS nations hold United States Treasury debt. And if that debt was to default, people who hold the bonds will not be getting... Are we back? Okay. Retirement funds would begin to collapse. Insurance companies would go bankrupt, begin to fail, as the United States Treasuries are essentially the backing for everything that is out there. I mean, when it comes to understanding the entire monetary system, it is critical to understand that the United States Treasuries are essentially backing everything out there. If it was to go into default, I would imagine something of a scenario like this, that if the United States Treasuries were to fail to get paid, and you had that as a fear and uncertainty that was ripping through the markets, it would collapse the entire system. What I feel would happen is the United States Treasury would then either do their best to buy back the defaulting bonds, the ones that are not going to get paid, right, which is very rare chance that that's going to happen, or the Federal Reserve will buy them, buy those toxic assets. That is what I believe would happen. So the Federal Reserve would literally buy the bad debts and swap them out for good debts, or just literally swap them for the ones that they have on their balance sheet that are good. So as these bonds begin to default, the Federal Reserve could literally shield the markets and all the people out there from having bad bonds or having bonds that are defaulting, and literally take those off their balance sheet and put it onto the Federal Reserve's own balance sheet, take on those toxic assets. Now, that to me is probably the most likely scenario. If it was to be weaponized, you could just not pay that of the nations in which that you deem are your enemies. You can say default on the treasuries that China holds, or default on the treasuries that one of the other sensitive nations to Russia, the ones who are doing deals with Russia, the sanctioned nations that are holding the U.S. treasuries just default on those bonds first, while leaving the rest of the insurance companies and sovereign nations and banks that are friendly to the United States continue to pay those. Now, I think that's a very less likely scenario to take place, as the people who are fearful of being sanctioned already or having like the dollar being weaponized, this weaponizing of the defaulting treasury bonds is probably one of the fastest ways to lose confidence inside of the debt issuance, inside of the United States Treasury. That is most likely the last attempt to try and protect the friendlies of the United States, is to default on the enemy's bonds first. But at that point, it would only be a matter of time before it starts moving into the rest of the markets. I have very little doubt that the United States Treasury will be able to continue on with their debt issuance going into the future. The only problem that I would think would come from it is the political mayhem that will come when you have both sides then arguing for a political pull one way or the other in order to make this debt ceiling deal, right? In order to make the deal go through. This has always been the case. And in fact, I kind of come to the conclusion that the debt ceiling is intended for that exact purpose, so that you can debate over whether or not you're going to raise the debt ceiling by having your political promises made or political, ideas pulled one direction or the other. This to me is a very common thing that takes place when you have this debt ceiling debate. So I can't imagine that anything would change going into the future, and we can imagine all this happening here in August, since this is when the budget office seems to think that we will be hitting that debt ceiling. Again, as we go looking into the future on what it is that's going to happen, you're going to find a lot of propaganda. You're going to find a lot of people out there talking about how this is the end of it. This is the system crashing. It's not going to continue on going into the future. And those are the exact same statements that have been made the 100 times before that, they come into this debt ceiling debate. So when you look at it and you think about what would happen if they really did go into a default, it's very unlikely scenario that's going to happen. The real default's going to come from the debt payments not having any purchasing power. That's where the real default comes in. All right. I should have left a link down in the description for you guys. If I haven't, then I apologize. I will get one down there after we upload the video. All right. The Wheel of Death. I love it. Hi, dishes. Okay. When will the free money come back? Free money? There's free money? I didn't know there was free money. All right. But you believe whatever suits you. I'm already talking to somebody out there. Let's see here. Did great on silver. It's holding value as currency values fall. What if inflation eats interest rates a lot? What if inflation eats interest rates a lot? You talking like what if inflation eats the return on capital investment? Is that kind of like what the question is trying to say? So like the real interest, the real return on interest, as far as like, your U.S. treasuries or something like that. I guess that's a wait and see what happens. Like, to me, I look at what it is that people are claiming for inflation, and it's really based on a lot of inflation expectations. I mean, think about how many people are behaving in an erratic way based on the idea of the tariffs that are coming. Very credible threat of tariffs, but yet nothing has happened except for the people's perception. And they are now conducting themselves in a way within this economy that is creating an inflationary scenario. Literally, the inflation expectations of the tariffs is creating the self-fulfilling prophecy. It's totally working. Now, again, like as we move into the future, we are going to find that the tariffs are going to be inflicted upon the economy, on these other nations. To what extent, to what workarounds, to what flexibility comes from it is a wait and see. And I think that's where most people are probably pretty concerned about the whole situation. Now, when you have inflation different from inflation expectations, like when these two are not operating in the same direction. And I know this is kind of odd to think, but I was even reading a paper, and I'm going to come out and do a video on this particular Federal Reserve study that was done, talking about the communications and how it is that they communicate to the public in order to create an inflation expectation. This is something that was really interesting that was written, and I don't know why I deviated onto this particular topic, but the inflation expectation, I think, is more important now to follow than just about anything out there, because really, like, the inflation itself, I think, is really individually based. You know, a lot of people say, how can you say that? Like, look at the cost of gasoline or look at the cost of a particular item. And I think to myself, you know, I hear a lot of people talk about how expensive groceries are, but then they don't talk about how they're finding sales and good deals on some of the groceries that are out there. My wife and I just recently did a video talking about some of the deals that we got at the grocery store the other day, and it was pretty interesting to find, like, you know, boxes of cereal for $1.79, and not cheap boxes, brand name. You know, this was just happened to come with coupons that she was finding, or, you know, 2-for-1 deals that were out there, and she, like, shops really, you know, really carefully, and was able to, like, literally beat the inflationary scenario that most people are facing, because she's just simply just working against it. Like, you know, she's going out there and purposefully, mindfully trying to find the good deals and then stocking up on those good deals when she sees them. Now, when I think about the idea of an inflation expectation being a self-fulfilling prophecy, it very much is. As people think and believe that there's or an elevated inflation out there, they are much more willing to accept a higher price on something. They're like, oh man, look at this box of cereal. It's $5 now. My gosh. And they throw the box of cereal, their favorite kind of cereal, into the bin, knowing that it's an expensive, you know, item nowadays, because they just read about it and they hear about it and they see it all over the news. And so therefore they're much more willing to accept this higher price. Now, if you're not willing to accept it and you go out there and you look for it, you can find where there's better deals out there. Now, here's something that I thought was very interesting in this study that they had done, where they were trying to create the inflation expectation, either elevated or, you know, most of the time they were trying to elevate the inflation expectation, because they were trying to get the inflation expectation, or the inflation itself, to meet the 2% target, and they were running persistently under that. The idea was, how do we find that inflation expectation to be elevated enough to actually raise the inflation? Here's something that they found when they did a study surveying. They said, hey, like, they asked them, what is the current inflation rate, right? Like, without any idea of what it really is, they just asked this survey of random people who were not paying attention, obviously, because this was before all the, you know, the recent inflation that we were experiencing. But they asked them, it was like, what's the current inflation rate? It was amazing to find that like 50% of the respondents said it was somewhere around 10%. Like, this is what the Federal Reserve was shooting for, was a 10% inflation target. They then then gave them some information about what was taking place within the economy. Part of that was the incredibly low unemployment. They said, did you know, after they said, hey, inflation is running 10%, it's high. They then asked these survey respondents, they asked them, they said, hey, did you know that in the unemployment is running historically low? Like, this is the lowest unemployment that we've seen in like recent times, and historical times, really historically low unemployment. They fed them that information. Their inflation expectation fell. They asked them again after that, what do you think the inflation is now, after the unemployment being so low? Their inflation expectation had fallen. This contradicts the Phillips curve. When you have low unemployment and you have more people working, more people consuming, supply-demand imbalances, inflation moves up. Low unemployment generally creates an inflationary scenario, but yet 50% of the respondents believe that low unemployment would lower inflation. High unemployment would be high inflation. And this is completely opposite from the reality of the situation, especially when you look back at things like the Phillips curve. Now, it has broken down this whole Phillips curve idea, right, where low unemployment creates this inflationary scenario, or this elevated inflationary scenario. Even Michelle Bowman, in a speech that she had given, says there's an insensitivity. Inflation has an insensitivity to low unemployment. And this is now a very weird concept for a lot of people who studied economics and looking at the Phillips curve saying, yeah, how come it's broken down? How come this low unemployment isn't creating the inflationary scenario that would typically come from it? Now, I found it pretty interesting that in nowadays, we don't have the same economy that used to function back in the day when we were a production-saving nation. We have drifted away from that. We've even drifted away from the ability to use monetary policy to stimulate the economy because we had reached the lower bound of zero. All these things are starting to break down, and it's becoming pretty obvious when you have things like this idea of the Phillips curve, which used to be an inflationary gauge. When unemployment would fall, inflation would rise. It doesn't work anymore, and even the people's perception, we're talking households, right? We're not talking like business CEOs and stuff like that. This is the household perception. This is the average person who then sees low unemployment as a low inflationary environment. Their literal expectation it comes to fruition, right? It creates the self-fulfilling prophecy. When unemployment rises, they believe that's an inflationary scenario. And again, inflation expectations is everything. And so when I thought to myself, how in the world did they come up with this idea? Like, how is it that the people's perception of low unemployment being low inflation, high unemployment is high inflation, which is not accurate? How did they get this idea? And I think to myself, oh man, if I was unemployed, everything would seem expensive to me. Right? If I didn't know anything about the economy, I didn't understand how banking worked, I didn't understand financing, I didn't understand fiat currencies, I didn't understand any of that stuff. And I just thought to myself, if I was unemployed, everything would seem expensive. Right? And I think this is really where a lot of people who are not aware, quite aware of what's going on within the economy when it comes to central banking, when it comes to inflation, they end up being subject to these kind of assumptions that are out there. And it seems to me, it seems to me that the Federal Reserve, if they can speak about this, they are now using this information, creating the inflation environment that they are looking for through the expectations. And by creating an inflation expectation that then results in what it is that self-fulfilling prophecy, they can do this through the communication styles and being aware of how it is that people receive the information and what the reaction is from it. This is totally how they are using mainstream media and using the narrative to conduct their monetary policy. Like, I try to break this stuff down as much as I can, guys, and I know it's super complicated. It is it's hard enough just trying to understand the economic forces that are out there. But when you start breaking down monetary policy, to know that their monetary policy had failed, to know that they had other ways of conducting themselves in order to achieve the economic performance in the economy that they were looking for in order to achieve those outcomes, it is incredible to think that they have really written down in their own words, communicating to each other how it is that they are doing this, and that they are going to use the mainstream media in order to conduct this monetary policy of communication, and how that communication is so different than the communication to each other is. It's like literally two different stories being told. And again, like, I try to break this stuff down as much as I can. I find all this evidence coming directly from the Federal Reserve, and it just like, I just don't get why it is that more people haven't clued in on it. You know, like, I know that the Fed conducted it in a way, this communication style, I know they did it in a way that was going to be very difficult to see it any other way than the way that they are communicating it out there, unless you had been aware that they were going to do it ahead of time. Like, I mean, it was just like, once you understood that they were going to use a gold machine, right, to produce as much gold at will with very little cost or energy, with that information moving out to the mainstream media, the price of gold plummeting, that imaginary hypothetical gold machine, it's totally working right now. And it's difficult to see it if you're not aware of it. Once you're aware of it, you can't really see it any other way. And so the more I try to break this stuff down for you guys, it's like, again, like, trying to get into all the little different fine tuning of this monetary policy procedures that they do. It is difficult to then, you know, show you guys exactly how it is that they are doing this in real time, when most of the time people are like using like the political environment to describe what it is that's happening within these, you know, within the environment itself, within the economy, when really it's the use of those words describing it that is really the monetary policy. It's how they deliver the message. That's really what it comes down to. How it is that they deliver that message. All right, 22 minutes into this. Let's continue onward. All right, kind of checked out. Let's see here. Chuck, you need to give more context than if you want to make such a point. Yeah. All right. I'm in. Yeah. I'm late. Right on, Wayne. Great to see you here. All right. You don't Neil's post. Welcome, Wayne. All right. Common mistake most people make when analyzing monetary policy is considering U.S. and as an isolated economy, when in fact some portion of that newly injected money will go to the euro-dollar market. Yeah, and I think that's a lot of times you're right. I think a lot of people end up, you know, kind of just focusing in on the United States and not really paying attention to the idea that the United States is the custodian of the world reserve currency. And being in that position is very difficult to then get your dollars out of the United States to meet the demand for them. Because this is really where I think a lot of people start to lose the idea, not understanding that the globe has written debts that are due in dollars. Those debts don't have anything to do with the United States. They don't have anything to do with our banks, don't have anything to do with our corporations, our government, our people, nothing. Like, it doesn't have a single thing to do with the United States, except that the debt was written and due in dollars. Now, trying to get those dollars out of the United States in order to meet that demand, because if the demand isn't met, then the dollar strengthens incredibly high, making our exports very difficult, right? Because the nations won't be able to buy our stuff. This is going to be completely opposite of what it is that we are trying to do as far as increase manufacturing, because really it comes down to not just buying your own manufacturing, but manufacturing stuff that other people will buy as well, right? And if you have a strong dollar, that makes it very difficult to do that. Now, with a strong dollar, we can buy the world's production pretty easily, right? That happens, but this is exactly the opposite of what it is that we were attempting to do, right? We're trying to not buy the world production, but buy our own production. So allowing the dollar to strengthen is a very, very dangerous thing to do. Pulling dollars in from the globe, saying we're going to bring some of these things home, will strengthen the dollar and do the exact opposite of making our exports cheaper for other people to buy. But it will make their foreign production cheaper for us to buy. This is a very difficult road to go down. Studying Triffin's dilemma helps. Like, a lot of times I will see people go like, well, what if all this manufacturing back to the United States and taxes and blah, 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 blah. And then I say, down at the very end of this very long thought out comment, study Triffin's dilemma. That's literally my answer to it. If you study Triffin's dilemma, it would answer a lot of your what ifs that are going through there. And Triffin's dilemma is to understand that once the United States had essentially flipped from being a producer-saver nation where we were producing stuff and sending it out there to the world, and we became an importing nation, and that at that point, we can no longer be on a gold standard. We would have to be on a fiat currency, debt-based currency, because what would end up happening is we were going to import all the foreign production and export all our gold, and we would all fall into pain and misery. So in order to be the world reserve currency and continuing to issue out fiat currency to the world, we would have to be in a trade deficit, meaning that we import stuff and export dollars. This is Triffin's dilemma. So once you see it, once you look at it and you start to recognize the problem that comes from it, especially when you think about the demand for dollars that are outside of the United States, and that demand for dollars needs to find dollars somewhere, somehow, and if there's no dollars available, the dollar strengthens. How do you keep that from happening so that your exports, the few that you do have, don't become so expensive that it deteriorates all your manufacturing base that you do have with the little exports that you're doing, right? See the problem that's faced here? This is why the United States goes into ever-increasing amounts of debt issuance, produces a consumer, that consumer buys the world's production, the world then, after they have sold us their production, buys our U.S. Treasury debt because that's essentially the gold standard. And if you want to have a safe and liquid asset, it's U.S. Treasury. So with your production, you buy U.S. Treasuries. All right, there's a $5 super chat from Javelin. Thank you so much. We just bought a piece of crap 97 Ranger today. Good for you. For $3K, right on. Looking forward to becoming wealthy soon. Haha, thank you, UE. All right, man, that's awesome. A 97, I love it. This is a 99, and I had a 95 Ford Ranger and absolutely loved it. Drove it for over 300,000 miles. This one's a 99. It has 104,000 miles on it right now. So this thing is like, it's awesome. It's got many years to go. You know what I love best about those old vehicles like that, and especially like, a 97, because it's probably got a bunch of dings and dents and, whatever going on with it. Something happens in the parking lot at the grocery store, you don't even notice, and if you do, you don't care. That's what's awesome about it. All right, the world need for liquidity versus our ability to not drown in domestic liquidity. That's it, all-nighter. All right, I'm looking at half the problem right now. Oh, talking about me? A to Z? All right. Simon, you can't have your Triffin's dilemma and eat it too. What are you talking about? All right. Can't have your Triffin's dilemma and eat it too. Okay. U.S. Treasuries have low returns. Well, yeah, but they're higher returns now than they were over the last, however many years. I mean, we just came off a record low U.S. Treasury yields. They're still not great. They are low, but with the idea that they do have at least some return to it, gives it some sort of investment to it. And the idea that interest rates would be going down into the future also gives it a speculation kind of capability. So if the yields continue to fall, the price goes up, you can sell that asset for a profit, or if that doesn't happen, at least has some sort of return. You can park your money in it and then get a little bit of a little bit of capital gains off of it, if you think it beats inflation anyway. All right. I had a 99, paid $1,500 for, then insurance paid me $3,600 for, no cash added. Mine was a stick and the battery died and I push started it for like a week. Yeah, nice. All right. How Fed will solve the liquidity issue? Okay, so this is actually a really good question, right? Because the Federal Reserve has pretty much already stated that the United States is on an unsustainable debt path, meaning that if they continue on this debt issuance, they are going to run into a point in which that it will it'll fail, right? And so the Federal Reserve has already said this. They're not on an unsustainable debt yet. They're on an unsustainable debt path, right? So now whatever that means, I couldn't exactly tell you. To me, that seems to be the same thing, but they're not yet have achieved or like moved beyond the unsustainable debt. They're just on that path to achieve that, or to achieve it, to get there. The Federal Reserve knows that if they continue to buy U.S. Treasury debt, that this is what they're doing. They're sending it into this unsustainable debt. But the Federal Reserve has already communicated. Ben Bernanke's speech from over 20 years ago had addressed this situation, knowing that there would be a problem with this to provide liquidity to the world. What is it that they are going to do? The Fed tries to buy the treasuries and crashes the United States government. But they already have the legal authority to buy the debt of a sovereign nation. And this can give them a huge menu of opportunity to buy foreign sovereign debt, put it on their balance sheet, and issue out dollars. That's crazy to think about. But then how big can they expand their balance sheet when they're not driving the United States into an unsustainable debt, but then buying the debt, sovereign debt of a foreign nation, leaving the United States out of it? How that looks, what that could mean, how that would change the economy is like, the hypothetical that comes from that is just beyond belief. I haven't seen where that be the case yet, or that they are moving into it, but considering that Ben Bernanke has already stated that to be one of the ways that they could deal with it, I'm not thinking that's out of the realm of possibilities, especially when you start incorporating the idea of digital currencies that can then confine the currency to particular locations. It just simply wouldn't work outside of whatever sovereign nation that they happen to be purchasing it from. You see, like they buy the debt of, I'll just make up a country, like buy the debt of Italy. But then all the money that they send into that particular sovereign debt cannot leave a particular region. Like it can only stay in Italy, or it can only stay in the Eurozone, or something of that nature, you know? Because it's a digital currency, they would be able to track, trace, and tax and do all that other stuff, control it in that fashion. Very scary to think about, very hypothetical. I'm not trying to say that's the case. I'm just like, like those are some of the things that I kind of spin on, All right. Luke Roman talked about the foreign debt purchasing recently. Oh, did he? See? I'm not the only one, right? And I wouldn't know anything about that if it wasn't for that speech, I mean, I haven't read anything else from anywhere on it. Like, I mean, at least I haven't, Alright. Rick, my 1995 Chevy S10 just hit 1 million miles. Oh my gosh. Wow. Original motor, transmission, and power steering pump. Wow. It was offered at 2000. It was offered at 2025. Sonoma, I get it next month. Offered a 2000. I was offered at 2000. Huh. That's crazy. All right. I got a 68 mile per gallon in my 81 Volkswagen pickup. I put it away for my daughter. She'll get it in 3 years. I don't know cars could last that long. Yeah, no kidding, right? I mean that Ranger, I mean the engine was still going good. It had 300,000 miles on it, and that was on the original clutch too. Right? And that was crazy to think. But really, for the most part, I drove it on the highway and I didn't tow. And I didn't like wheel it or anything like that. Like I wasn't, 4-wheel drive or anything like that. So, and the thing, like you could really shift it without the clutch anyway. I mean, it slipped right into gears, no problem, if you had it at the right RPM. So really, the thing was like, it was a really good running truck. It just lasted forever, no problems. All right. Japan threatens to dump 1.1 trillion in U.S. Treasuries over Trump's tariffs. Trump conceded defeat in tariffs. No, first of all, the Japan wouldn't do that because it would be like setting their own asset on fire. Right? But that's literally the case. Like, if you take a bunch of treasury, you take $1 trillion in treasuries and you're like, screw it, I don't want these things, and you start dumping them out there on the market and you start flooding the market with U.S. treasuries, the price of those things would start to collapse, the yields would start to rise, and they would literally destroy their own value of their asset that they are trying to get the money out of. You know? It's like, here, let me take an asset of value and make it as unvaluable as possible as I get out of it. That's like what that would do. They're not going to dump treasuries like that. And they might threaten to do it, and and Trump might react to the threat, but it's all threats, right? I mean, it's the same problem that, what are they going to replace it with? Right? Once they sell U.S. treasuries, what do they end up having? They end up with a bunch of dollars, right? The dollar ends up strengthening. Well, Japan has debts that are due in dollars too, right? And although they just sold this asset for a loss, essentially, now they got the dollars. They're going to pay their debts with the dollars, like essentially the dollars they acquired from an asset that they destroyed the value of. You see, like, this is like, it doesn't sound right. That to me doesn't sound like something they're going to do. Like, let me see if I can give you an analogy of how that would look. Like, I owe on a credit card, right? I owe money on it. So I have 3 cars that I'm going to sell to pay for the credit card. The person I go to, right, and I say, hey man, I got these 3 cars, I owe 10 grand on my credit card, I want 10 grand for all 3 vehicles. He says, well, if I'm buying all 3 vehicles, I'm going to get it for a discount, so I'm only going to give you 7 grand. You sell it for 7 grand, but you still owe 3. Like, this is like kind of the analogy, instead of like selling all of it for 10 to pay your credit card off. But that's what it would essentially be like, because if you are dumping out the asset, then you're going to flood the market. The market is going to the market is going to demand a cheaper price for it if you flood it. And if you get a cheaper price for it, you're not going to get as much to pay back your own debt. So no, that's not the way it's going to go down. I fixed my Volkswagen Rabbit with a coat hanger and only 2nd to 4th gear. Maybe that'll work for the Fed. Have you checked up on the Europe anytime lately? You don't need to sell all your cars to the same person. Well, that's exactly right. Right? So now you're going to sit there and you're going to sell it out there on the market. So now there's 3 cars that are going to be flooding the market. Is all I guess I'm getting at, is that if you go out there and you start pushing, it's the same problem that Russia was facing when they took on all the rupees from India by selling them a bunch of oil. Now they're sitting on a bunch of rupees that they didn't know what to do with, because they go to other nations and the other nations are like, yeah, piss on your rupees, we don't want those, right? So now Russia has all these rupees they really don't know what to do with. You can go back to India and say, okay, well, I guess you're my only place that I can actually spend my money with. So I sold my asset, right, the oil, to acquire rupees that I can't use because the only place that will accept it is India. Now I can sell these rupees because there is a market for rupees. There are people out there who want to do deals with India and they need rupees to do it, and they'll be willing to buy rupees. But you start flooding the market with rupees, they're not going to give you top dollar for them, and all the money that you had made selling oil is essentially set on fire as you try to get rid of the rupees in order to acquire the essentially dollars you would need, because that's what people would want. And this is the problem that they end up facing. It's like, I can try to describe it any other way, but this is what occurs, right? This is like, it's not me saying this is what would happen as if a what if. This is what happens. All right, hello everyone. Started trying to understand the Cantillon effect and applying it to some of the modern things that are going on in the economy. Thanks, UE. the Cantillon effect and applying it to some of the modern things that are going on in the economy today. I mean, I think understanding the purchasing of luxuries is probably it. Like, if you can understand how the purchasing of luxuries is what creates like the inequality, it's what sends manufacturing out. It's it's that shift generally into debt purchases, like using debt to purchase things. The purchase of luxurious items, right? And now what I think is kind of interesting is that you can relate this down to yourself. Like, most people end up looking at it as a whole. Like, what can we do as a whole, all of us together, right? What can we do in order to fix the system, right? And now what I love about this is that people want to know what it is that we can do as a whole to fix the system, but then the actual fixing of it will require an individual conscious effort to not move themselves into a luxurious experience. It's literally to say, okay, you can't have an elevated lifestyle. You can't increase your standard of living. You have to go and work very hard. Do not take out debt. If you do have debt, pay off the debt. Don't use the extra money, whatever extra is. Do not use extra money to elevate your lifestyle, but then to move back into production and savings. This is the mentality that every single person individually would have to do in order to fix the system, right? Because anything beyond that, if you move into luxury, if you elevate your standard of living, if you start using debt issuance, then you are going to create a situation that separates the rich from the poor. And you're going to start driving manufacturing out of the United States. You're going to start bringing in ever increasing amounts of foreign production. There is no way of doing it any other way than that. Now, you can, as an individual, you can make the conscious choice and hope that everybody else does the same thing. Most likely, human nature will not go that way. Human nature will say, I worked hard, I want to enjoy my hard work by moving into a standard of living that has been elevated. That's what human nature says. And so now, if you want a situation in which that, because you can't get everybody to join in, right? You can't make everybody do this conscious effort to then say, hey, I am going to work hard, I'm going to save, I'm going to be the producer, I'm not moving into an elevated style of life, I'm not going to do all that stuff. We know that is going to be a very difficult road to say, hey, everybody do this, right? Now, what you can do is have government put their boot on the face of humanity and say, you are not going to elevate your life. We own all the production. We are not going to allow certain things to take place that would then create the environment that foreign production would come in and compete against us. Does that sound fun? I mean, there's evidence of that taking place. So which one is it? Because fixing the system seems very difficult to me. Like, I don't think that that's possible. Knowing that it's not going to be easy to convince everybody to take the conscious effort to not move into a luxurious experience, knowing that's probably not going to happen, I'm not asking for it to take place, because the other form of it is going to be pure tyranny. So which one? Do you want to fix the system? I don't think I really want to fix the system at this point. I think I want to understand what's going on within the system so I can make the best and most appropriate decisions for me. That's what I'm going to do. Because any other way of going about it is going to be a painful, miserable existence that nobody's going to appreciate or want to deal with. It's just the unfortunate consequences of the situation. Legalize free market capitalism. Let's see here. I chased pleasure last night and ate some ice cream. I ate some ice cream too, Walrus, and I guarantee you, man, I felt like I got the painful experience from it. Like, Sarah and I on Tuesdays, there's a local bar down here that does these cheap tacos that are just killer, absolutely excellent. If you're in Astoria on a Tuesday, go to the Desdemona and get their $2.50 tacos. They are just at the bomb. So Sarah and I went and got tacos, and then we stopped and got some ice cream on the way home, ate the ice cream on the way home, and I kid you not, I feel a sugar hangover because of that. Like, I ate that ice cream, went to sleep, and woke up this morning feeling like hell, and I know it was that sugar that I had just before bed. You know, and something interesting. Here's another, how much time do I have? Okay, I got a few more minutes left here, and then I'm going to call it quits. I got a bunch of errands to do. Here's something that I thought was really interesting. Sarah and I were talking last night about making money and how a lot of times the understanding of making money, a lot of people have it in their head that it's hard, right? Like, making money is hard. You got to work hard to make money, or working hard for money. And I thought about it. It was just like, you know, anytime I've ever made like a lot of money in my life, like anytime it came in like a huge fashion, like a big chunk of it, it was easy. It was really, really easy. It wasn't hard. It was easy. In fact, all the money that I've ever made that was what I thought like a lot or an abundance of money, anytime it ever came to me, it came to me super easy. It never came to me hard. What came to me that was hard was stability. Like, I worked hard for stability. And I would have stability by working hard for it. But the money, working hard for that stability, meant working hard for money. And so the money would come hard. It wasn't a lot either. It was very infrequent, or it wasn't very much. It would be like consistent because it was stable, but it wasn't enough. It was always like, you know, just barely cutting it. Hard was good for stability, but hard was not good for money. Easy is good for money. Think about this. This is a good way of using this analogy. Because, like, you know, you can use something like a lottery ticket. Like, it's how hard is it to scratch a lottery ticket? It comes real easy. The money does, right? But it's more than that. It's just the energy of it, right? Money is just an energy just like anything else out there. And so think about it like this. If you were you're down at the creek and you're fishing for salmon, right? And it's like, you're not catching. It's difficult. It's hard. You're switching through lures. You're up and down the stream. You're trying all the techniques. You're not catching anything. Finally, you get one fish, right? It took you all day, all these lures, lost it, freezing cold, fell down a couple of times, you know, so now you're soaking wet, whatever. But you finally got your fish. You worked really, really, really hard for that one fish. Then there's other times you've gone down fishing, and every cast you're catching another fish, and you load up on fish, and it was super easy, and you didn't even have to try. It was just like they were just jumping on the line. You could just, like, there was no problems to it. You got an abundance of fish, and it was easy. You see the difference inside of it? It's like being in the right moment at the right time, enjoying and using the energy for what it is, working hard to catch the fish. You finally catch the fish, you feel rewarded for it, right? You're like, man, I finally got it. I knew I would finally do it. Yeah. But you had to work hard for that fish. Other times when it's easy, the fish just roll in. You just get as many as you want. And that's the same for anything out there. Anything has that same type of energy, you know? And I got to laughing at that last night as I was talking with Sarah about that. And I'm like, yeah, anything that I've ever had in my life that I was doing that was hard was stability. Anything that I did for money that was, you know, that came in a large fashion was easy. You know, make a 10-minute video, money instant, come in. Wow, like, what in the hell? Go out there, work all day for an hourly wage, and just feel completely exhausted and beat up for it and not very rewarded. But you get to do it again tomorrow, right? All right. I always put sauce and nuts in my frozen yogurt, so should have had ice cream. All right. Forget hourly. Who's Sarah? Another YouTuber? Yeah, Sarah's dishes. Dishes every day. Probably the easiest money I made is in the stock market, but emotionally draining. Right? In theory, wouldn't the cost of domestic production decrease once automation kicks in higher gear competing with foreign production? Okay, so here's the thing that I question about that. Are you the only one who has the ability to automate your production? So your competition against the foreign production is one that says, hey, we got automation here. But then the foreign producer can do automation too, right? And now I know a lot of the ideas is like, well, wait a minute, we have this higher standard of living here that won't be competing against the foreign production because automation is doing it, right? So it doesn't matter about our higher standard of living if automation is what's producing, so it can produce at the same rate that the foreigner is producing at. Right? This is kind of the idea behind it. But then we don't incorporate the energy cost that goes into it, or the environmental impact that goes into it, or the transportation that can come from it. And so when we start incorporating, is it cheaper from environmental? Is it cheaper through energy cost? Is it cheaper through transportation? Is there something that the foreigner can do with their automation as well as it, to compete against us? Do they still have a capability of producing it cheaper? Right? Just because we created a technology that says, hey, we can compete against their labor, doesn't necessarily mean we can compete against them in all the rest of the aspects of input costs. Right? And that's again, it's like, I don't know how many people consider those kind of things, because this is really, again, if you read Cantillon's essay, he talks about that. He talks about, like, being able, like, what ends up happening is if you're a producer of a foreign product, or a product that foreign people buy, right? An exporting product, right? But then you find that foreign production starts to compete. At first, they're not as good. So you got a good product that you're going to sell to yourself and probably to some other people. But the thing is that you've lost them as a customer, right? So you were producing and selling to this particular foreign entity, but then they started producing it too. It's not as good, so they're not necessarily producing it out there for other people to buy, but they stopped buying from you. So now you just lost some of your market share. They will continue to operate and eventually get good to the point that they start exporting. When they start exporting, you're going to find that you cannot compete with your own domestic manufacturing against their foreign production, and eventually they will get to the point that their quality is enough to compete against your higher quality with cost difference. They start importing a cheaper product. Even though it's not as good, it still ends up taking away the shares of purchases that would come from your higher end product, and you start losing your manufacturing. There's no way to stop it, right? There's ways of slowing it down. There's ways of creating an environment that gives an illusion of, like, hey, we're fixing it, but you can't stop it. It's an economic force that is going to continue. Alrighty, guys, my phone's dying and I got some errands to go take care of. I'm gonna go register the Suburban today. Does UE sell merch? Yeah. There's, if I didn't leave the link down in the description, typically I have links down in the description to Teespring, where you can go buy hats and hoodies and cups and glasses and stickers and all kinds of stuff. T-shirts. I started writing ebook years ago. Lots of hard work and research up front, but easy royalties for the rest of my life, and who inherits the rights? Huh. Yeah, that's what I need to do, start writing books. Do you think the situation you talk about with the Fed will lead to a bull run? Oh. See, this is another question that I think a lot of people end up having. They ask me these questions about the market, what my stock predictions are and stuff like that, because they want this information to then provide them with a profit or something like that. And what I find interesting about it is that I'm just in the natural flow of money, right? Like, I don't think about the information, like, how do I use this information to make money? I just use the information to make money. I don't think about how it happens. I know that if I'm going to invest into the stock market, I better dollar cost average, because I am terrible market timer, right? I've tried doing like day trading kind of things. I'm terrible at it. Like, I mean, maybe I should try it again. Maybe I've gotten better at it. But for the most part, the only time I've ever really done well is when I dollar cost average in. When I see that when I'm dollar cost averaging, if I see a particular week or month in which that it has dropped significantly, the particular stock or Bitcoin or whatever, then I might step up a little bit more in my purchases. But for the most part, I just average in. It does it does very well for me. That's how I look at it. I don't think about it being anything else, right? It's just that. Now, the information, when I think about making money off of it, I don't even think about making money. I think, okay, get in the flow of money, get in the position in which that money can flow towards you. How do you do that? Come out and make a video and monetize it. And for me, that's how I use the information to make money, is by literally coming out here and talking about it. When the ad revenue comes in, then I take that money and I think, okay, what do I do with this, right? Put a little bit towards stocks, put a little bit towards the house, put a little bit here or whatever, right? And then get back into the flow of money. Like most people, when they step into the flow of money, they step in at 8 o'clock in the morning and then they step out at 5 o'clock, right? That's it. That's the only time they're in the flow of money. Now, there's people who step out at 5 o'clock and now step into a side hustle of some sort. Or people are researching what dividend stocks they're going to buy. Or they're researching how it is that they are going to, create some sort of revenue outside of their 9-to-5 job, right? And this is like, literally, this is how they've stepped into the flow of money, right? Just be in that flow. You don't have to think like, how do I make money, right? Because like that's like chasing money. Okay? How do I make money is like, how do I do this? I don't know. Tell me, right? It's fleeting. It's a way. That's not it. Just be in the flow of it. Just be in the flow of money. Just like it's like literally stepping out into the surf, right? Be in the surf, right? And I know that's hard for a lot of people because our ego tells us differently. Our ego wants us to be safe. Our ego wants us to be sure about things. Like they want us to be guaranteed, stuff like that. And easy doesn't come with a guarantee. Easy doesn't come with stability, right? Easy is just like, it's just being in it, right? You don't even think about it. Like the surfer doesn't think about, being in the ocean and watching each and every single wave with a critical. No, he's just there flowing. He's like, oh man, here comes a nice set, right? Like he isn't thinking about anything else other than just being out there and just being in it. And that's really, I know like it's hard to switch that sort of mindset because most of us have been deprived, been sitting in a position of scarcity, not really understanding the feeling of abundance. Like most of us have lived that sort of life. And because of that, it makes it difficult to then change the way that you are feeling and thinking and behaving about things out there. Once you have changed and understand that it's just an energy flow like anything else, like, have you ever been to a party and everybody's having a great time, but there's one dude over there who's just like totally in his thoughts, all depressed, broke up with his girlfriend, and he's like a total drag, like a buzzkill, right? That's because he's not in the energy of the party. He's not partying. He's not an energy. Is like that's not working for everybody else out there. It's certainly not working for him. He's not having the good time, and he's not having and everybody else's good time isn't working for him as either. Same thing, right? If you're going to be in the energy of money, be in the flow of energy, be in a position in which that money can flow towards you, right? Again, most people just don't understand it outside of a 9-to-5 job. But then once you start doing like online sales or you start figuring out a side hustle of some sort and you start thinking of these other ways that you can get money to start flowing towards you, it starts to become easier to understand how it is that you position yourself to be in the flow of energy, be in that energy flow of money. It's like, it's not even like for me, like even I end up stepping away from it a lot, like especially when it comes to the sponsorship offers. I have a lot of people who offer me sponsorships for the videos. Like they're like, dude, how much does it cost for a 30-second ad at the beginning of the video? And I don't even reply back to the messages, and they come a lot. Generally I get 4 or 5 of these a week that come in. And so to me, like here's an egotistical way of looking at it as well. Is I don't want to earn the money that way. I want to earn it this way, right? Here it is. The universe is saying, dude, we're trying to provide you with an abundance of money and you're denying it. This is literally me telling myself this, right? Here it is, right? Take the sponsors, earn all this kind of money. And I'm like, oh no, I want to earn a lot of money, but I don't want to earn it like that. No, right? And so here it is. I'm literally removing myself from the flow of money by doing that. Right? And by doing that, I end up denying myself the way of getting money the way that I would think that I want to do it. because I have denied myself the flow of energy and money in that. See, I'm thinking this out like right now, but this is really the reality of the situation of it. See, I don't get the abundance of money coming in because the abundance of money that's coming in, I don't like it. I don't like that. I have an egotistical way of thinking about it. Right? And say, no, I don't want to get it that way. Right? I don't want to be a sellout or something of that nature. They're like, really? Here, you don't want all this money that we're offering you. I'm like, oh no, I don't want any of that. How silly is that? All right. Feel free to take sponsorships to the fund. Oh yeah, to fund the RCL. I won't think any less of you. Yeah, I know, all-nighter. And that's really something I should do, is try to promote this channel to be sponsored, or to be viewer sponsored in every way. Now, I kind of do that with the membership, but it's only $1 a month, and I do have a lot of members to the channel. 650, 700 at times, and that's so awesome. Like, to have, a membership group as big as that. I mean, it's just incredible to think. And really, I would like to see it at like 10,000. Like, to me, like 10,000 members paying $1 a month to get hardcore information that I have done a lot of research to study and to compile and share with you guys. I mean, to me, that would be like the ultimate dream for the channel. And that's the way I would love to do it. If we get there, we get there. If not, the road to get there is a lot of fun. So, I mean, I'm just going to enjoy that process. Alrighty, guys, I really got to go now. You guys are awesome. Thank you for hanging out for the hour. Uneducated Economist, the employed entrepreneur. Yeah, right? But I'm just going to read a couple. That's not denying. Sometimes it's postponing. Sometimes it's delayed gratification. Have that Tish compound. Yeah. He survived because he made his business a Walmart prices guy and great with the money. Thanks, everyone. Yeah, thank you, everybody, for being here. You guys are awesome. MRider777, I'll read yours last. If I went, there were that easy, 99% of the world would not be living this way. No, M. Ryder, see, that thing is that it is that easy. 99% of the people don't believe it, though. 99% of the people literally have thoughts that suppress them, that keep them from advancing, that prevent them from actually excelling in life. 99% of the people are stuck. All right? It's literally your thoughts. It's your thoughts, behaviors, and actions. I know a lot of people will disagree with that. I'm trying to tell you from my own experience. I know. 40 years old, drunk, no money, deep in debt, no working vehicle, like 1 week away from losing, like having no money to pay any of my bills, completely, like, done. Like, that's the situation I was in. Within less than, I'm 48 years old now, right? So in 8 years, I managed to go from having absolutely nothing going on in my life, just about ready to lose everything I had, to a mindset change that now has put me into a position in which that I have, I'm buying a house, I have vehicles to drive, I have money in the bank. It's just like everything absolutely changed for me. And there was a time in my life that I didn't think I was going to have anything going on. I thought for sure that there was a moment in my life that I just had come to the understanding, come to the conclusion that there was some people in this world who were just simply not going to have it. And I was one of those people. Once I switched my mindset and said, nah, I don't think so anymore. I think I can have it. I think I will have it. In fact, I want to have everything. I want it all. I want everything that I could ever possibly have ever imagined doing. I want it. And it started happening. Then, luckily, my wants, my desires, my dreams are not like other people's, right? The Camaro, so whatever, if it comes, it comes. If not, I don't really care. Meeting G. Edward Griffin, holy crap, talk about a thrill. Being able to go and speak on stage at events like the Rebel Capitalist, that to me is like the ultimate of experiences that I could ever have dreamed of. Right? These things happen when you change your mindset, when you change the way that you are thinking and feeling and believing, and you step into the energy of receiving. Right? And that's it. That's all you really have to do. Most people will not believe it, and therefore, by not believing it, they will put up the walls that then will prove their case, and their ego will say, ha ha, see, we were right. Uneducated economist, you guys let me know.